Hey guys, Matt here with FxPM Software, and in this video I want to talk about our 5-minute scalping strategy using our dynamic Fibonacci indicator. First, let's jump inside my computer. I'll show you more about the indicator, how it works, then we'll talk about our rules for entry, and then I'll show you a live example. And at the end of the video, you can click the button, download the platform, and try it out for yourself. So you can see as the price drops, we hit this level here, comes back up, hit this level, it bounced off, found support at this level, came up, hit this level, bounced off, finally pushed through it, came back in, kind of played around this level, came in, bounced off of this one, had a nice run, comes off, back into the center zone, tries this level again, can't get through it, tests this level here, pushes back through, uses this level again, and comes back down. We have some tight price action around this area before dropping in to the white zone again and hitting our first green shade. So I'll move forward here. Pushed through this level. This level had been tested 3, 4, almost 5 times, so it was due for a break. Finally got it, came to the next level, had good price action off of this, came back down, retested this area here, which was previous resistance, turned into support, had a nice push up through this, and we went up to this 4th level, which these 4th levels are really strong. If you can get entries out here in these dark shaded Fibonacci zones, those are trades that you definitely want to hold because there's potential for a bigger retracement. So we had a nice play back towards our white zone here. Price kind of got comfortable again, played around between this Fibonacci zone. Our zones recalculated through here. Used it support and resistance. As price consolidated here, you can see our Fibonacci zones consolidated back in. We played off of this one, came up, kind of played around here, and really not a lot of price action now. This is later in the day. There's not much going on. Alright, so let's go ahead and talk about the rules for entering this 5-minute scalping strategy. And up here we've got our red levels, 1st, 2nd, 3rd, 4th, and so on, and our 1st, 2nd, 3rd, 4th, so on, green levels, and that's where you're going to be placing your trades or entering the trades on. If you're new to trading, I want you to focus on just entering when the price is testing these levels for the first time. What I mean by that, if this is our price, and we come out of the red zone, and we come down into this green zone and it's hitting this green zone for the first time, that would be an area where you would take a long position. And ideally you would try to play it back to this first zone. That's typically around 10 points. It all depends on the volatility. It depends how wide those zones are. But if you're trading within this first zone, I typically use a 5-point stop and a 10-point limit, risking half of what I'm willing to make. I'll get into trade management a little bit later, but that's just a basic concept. Now, if the price comes back down and tests this level again, I will typically pass up on those trades unless I'm looking at some other thing. But you don't need to be concerned about that right now. Starting out, pass up on these unless it's a first test, pass up on it, and try to get the trade down at this level. Now, if you're into a 3rd level, what you can do is you can put a 5 to 7-point stop, and you can look for 10 to 15 points of profit because, again, the price is stretched out further. Price can only go so far, so fast, before it wants to come back to where it started, or at least head back that direction. The further away you get from this middle zone outwards, the more it wants to go back this way. And so all we're doing is trading off of these levels back towards the center. Now the same is true when it hits the red zones. Same thing. If we were to come up and hit this level, I would trade this short. If it's a first zone here, I would do a 5-point stop and a 10-point limit. Try to play it back to this other zone. So you're trying to take advantage of this section right here. Now if we didn't continue down and we kind of got range bound and we broke up through it and came up to this area, Again, this is where I would do a 5 to 7 point stop, and I would look for 10 to 15 points of profit on that trade. So I want to show you a quick example. This was a pound-dollar trade I took probably about 20 minutes ago. It was a trade that had came off of these zones actually and came down and hit this first green zone and just barely tapped it. I was able to get fills here, and because we had had such a steady retracement down, I went ahead and put a 15-point limit on it. I felt that we were going to work our way back up through this and kind of cover some of this move that we did, and I put a 5-point stop. So within a matter of, it took a while, it took probably about half an hour. It was kind of a set and forget type of thing. I had my stop in. Immediately it kind of came up 6 points or so, I think, and I went ahead and went to break even. At that point I basically walked away from the computer. I had my limit in, I had my stop, and the trade got limited out. So anyways, this is just our very basic 5-minute scalping strategy. It works really well. As you use the software a little bit more, and I'm not going to get into this much detail in this video, but there are ways where you can weed out some of these trades that are a little bit lower probability based on price action and how the price is reacting to levels previously before it hits this one. Does it respect this level? Things like that. There are a few things that I look for to basically say, yes, I want to take this trade, or I'll go ahead and pass up on it. We'll save that for another video, but for right now, this is probably the simplest scalping strategy you can just get started with and start trading off of these levels. That'll give you a good feel for it. You'll get comfortable with dynamic Fibonacci, and then you can work towards applying that to the matrix a little bit later on. So let's go ahead and go back inside of my computer, and I will show you the trade that I took just a little while ago. Alright, we're in here on a green zone. It's a first zone, so not great. Much prefer this area down here. Had a nice steady pullback into this green zone, so we'll go ahead and get in with a 5-point stop. Go ahead and do a 15-point limit. Even though it's not a great trade because we're not on a second or third zone, my risk to reward is 1 to 3, meaning I'm only risking losing 5 points to make 15. Now what I'll want to do as I continue to go in the profit here, I want to get my stop loss ready to go to -3. Our strategy is focused on reducing risk, and if you continuously focus on reducing your risk, the money will follow. So again, as soon as I click modify, my 3-point stop loss will go in. Still think I'm a little early for that. We still got some movement here on euro dollar. Hoping dollar yen will turn to the downside here. That'll help our pound dollar position out. And if euro dollar will find support, that'll also help as well. So we're up here about 5 points. I'm going to go ahead and modify it. So now I have a -3, and I will continue to eliminate the risk in the trade and get ready to go to break even. So we're up here 6 points. I'm going to go ahead and go to break even, so I have no risk in the trade. Hey guys, I had stepped away from my computer and my recording shut off, and I didn't realize it. But here's where we took our entries, and right down here at this green zone, price came up. I think the recording shut off somewhere in here. It wasn't too long after that. We worked our way up above this, used it as support, and continued up higher and got limited out for full 15 points. So again, risking 5 points to make 15, do that all day long.